Hey everybody, I just wanted to make a long ass technical video. Now we're going to start by looking at the S&P 500 heat map. So if we're looking at the S&P 500 heat map and the 1 week performance, we can see that the technology sector killed it, especially the semiconductors. They are bright green. Utilities definitely lagging, real estate lagging, consumer defensives lagging, healthcare lagging as well. And we can see that these major bank stocks, they're rallying pretty hard as well. So let's look at a 1 month performance. So 1 month performance, mega cap tech is killing it as well. Energy is bright red, real estate is red, utilities are red, and healthcare is pretty red as well. And bank stocks right here, they're pretty red as well here. Now, what about a 3 month performance? So if we're looking at 3 months, mega caps are still killing it. Tesla, not doing too hot. Earnings weren't that great. If we're looking at energy, energy is red, real estate is red, utilities are kind of flattish, mixed bag. We can see that bank stocks, they're getting wrecked. And healthcare is mostly down, sort of a mixed bag right there as well. Financials, Visa, MasterCard, they're killing it. What about 6 month? So 6 month Visa, MasterCard, they're killing it. The mega caps, they're also killing it. Clearly, you can see right here, Meta up 116%, 117 actually. Amazon, Google, these are up about 20-ish or higher percent. Nvidia, that's 96.5%. Microsoft, that's up 31.7%. Energy, energy is down. Healthcare, that's kind of down, mixed baggish. And if we're just looking at utilities are kind of a mixed bag as well. Consumer defensive, Coca-Cola, Pepsi, they're doing well. Everything else is kind of down and flattish. So that's basically a summary of just kind of the overall S&P 500 in the last 6 months. Now, another thing that I did want to focus on is that recently, we did see a breakout on the SPY, but here's what I'm worried about. I'm worried that this is a Wyckoff distribution event. So here in this Wyckoff distribution event, you kind of see this sideways price action, and then you see this breakout. Now this breakout is phase C, and then in this breakout, it could kind of be in this breakout for possibly a short period of time before you see a significant, strong move to the downside. So this is what I'm worried about. I'm worried that, we could be in the beginning of phase C. So now let's go ahead, let's jump right into the technicals. So right now I'm looking at the Fed funds futures and the spread between the May and the December contract. So right now, it's giving us a negative 0.36 reading. So that's basically saying, hey, you know what, between now and the end of the year, we can expect basically one rate cut. And the interesting thing is that not too long ago, this was giving us a 0.66 reading, a negative 0.66 reading. So that would imply about possibly 3 rate cuts. So this has actually changed significantly since the last few days. Now, the interesting thing about this is that, the NASDAQ and the S&P 500 have been going up. So to me, that is a divergence right there. So definitely something you want to pay attention to. Now, let's go ahead. Let's look at the Qs. So Qs have had a significant run. So let's just zoom in right there. So Qs have had a significant run. It is ever so slightly above this rising wedge right here. We did break above that fib retracement level, that 50% fib retracement level. I personally thought that this would have acted as resistance. And, I didn't really think that we would make it above this, especially in this manner. We're at 336.51 now. But my inclination is that, people are probably shorting right around here. And what we're seeing right now is a squeeze. So that's kind of what I'm thinking right now. And if we are looking at the RSI, it would be indicative of that. It's at 71.34. So be cautious because in the past, we've seen RSI this high. So when RSI was this high, it kind of stayed there for a little bit. And then, we did significantly sell off right there. And, in the past, RSI, it was up here. That was a tipping point. So definitely do be cautious. If we do have some upside, I would maybe be looking at that next fib level. That's about 349.71. Now, I do want to look for old gaps. So if I want to look for old gaps, I would go ahead and look at the intraday. So I want to look at the intraday. Let's go ahead and look at the 360 1 hour. Now I'm going to go ahead and kind of scroll back in time. So if we're just looking right here, you know, we did fill that gap right there. That was around 322-ish. And we did have another gap up here. So you guys can see that that gap was also filled. That's about 328.70. Now I'm going to have to zoom back out and then scroll out further. So let's scroll out further. Let's look for some more gaps. So this gap has not been filled. And let me zoom in. So that gap is all the way at 359.53. So that's a ways away. So you know, I don't think we're filling that anytime soon, just given where RSI is right now on the day chart. So day chart, you know, like I said, RSI is at 71.34. So definitely a little bit risky, especially given that we have 3 downside gaps on the Qs. Now, moving on, let's go ahead and look at SPY. So SPY, you know, this is what I want to focus on, this movement right here. So sideways, sideways, and then breakout. So let's go back. Let's look at this Wyckoff distribution event. So sideways, sideways, breakout. So where we are right now, I think it's phase C. I could be wrong, but let me just explain to you why I think that this is a distribution phase. So, you know, we're coming off this mad low bottom here on October, and we've essentially had this massive rally. And if we're looking at where RSI is right now, it's around 61. So, you know, we're starting to break out when RSI is around 61 after coming off a massive rally basically around 2 quarters ago. So another thing to keep in mind is that the Qs have had a massive run up and the RSI is over 70. So to me, you know, with 2 downside gaps on the SPY, 3 downside gaps on the Qs, it would not surprise me if this turned out to be distribution and we're in that phase C where, you know, we could be hanging out here for a little bit and then eventually we see a massive dump and then we possibly see this gap getting filled, maybe even this gap getting filled. So, you know, that's kind of my thesis right now. Obviously, I could be wrong, but, you know, I did explain my reason. So now let's go ahead. I do want to look for some old gaps here as well. So if I'm going on a time frame, I want to go on the intraday. Let's go ahead. Let's look at the 360 days, 1 hour, and let's go gap hunting. So, you know, if I am scrolling back down here, let's see. So we do have this gap right here. So let me zoom in on that. So we got that gap right there. That's around 322 pretty much. And then we have another gap right above that. That's right around 327. So if we do fill both of these gaps, you know, I would start getting cautious because if that were to happen in the near term, you know, like I said, RSI right now is sitting around 61. So if we were to fill both of those gaps, it wouldn't surprise me if we were at 70. And I don't even want to think about what the Qs would be at. The Qs would be way over 70 probably. Or maybe, you know, the Qs pull back and the financials rally, and then that's what gets SPY to fill those gaps. So obviously, you know, different scenarios could play out, but like I said, you know, I do think we're in that phase C. Maybe, you know, we could march up a little bit higher, but ultimately, you know, I do think we're going to have that strong push to the downside. Now, let's go ahead. Let's look at Tesla. So Tesla is a little bit interesting. So if right now I'm on the 30-day, 30-minute chart, and we filled that gap to the upside right there. So as of now, we're slightly above that. And let's go over, let's look at the 1-year chart. So if we are looking at this 1-year chart, you know, we are above this fib level right here. So this is the 38% fib level. That's sitting at 173.40. We are above this 50-day moving average. That's at 177.95. And we do have this fib level right here. That is the 23% retracement level. That's right around 190.31. Now, another interesting thing to note is that we are above this resistance trend line. And let's just zoom in. So we have gone above here before. So look right here. We got above this 1 day, 2-day, 3-day, and then we got right back in it. So that could be another thing that happens right here. Maybe this is another false breakout, but I would be paying attention to this 50-day moving average. If we get right back below that, that's signaling some sort of risk, because this could potentially be acting as resistance, because we got above this in a pretty quick manner. And it was kind of following that entire tech squeeze that we recently just had. We're also above these anchored VWAPs right here, so let's zoom in on that. So this anchor VWAP is right there at 174.61. This one right here, that's sitting around right around 177.61. So we are above both of these anchored VWAPs. We are above that 50-day moving average. If we were to slice below all of these, then yeah, the situation would not be good in my opinion. Especially if we slice below this fib retracement as well, which is sitting right at 173.40. So that's pretty much what I'm seeing with Tesla. Now moving on, let's go ahead, let's look at Meta. So Meta, to me, it's kind of just hanging out here, and honestly, Meta is kind of one of those stocks that I wouldn't be doing a whole lot with, because it's up over 100% in the last 6 months. So it's very similar to Nvidia in the fact that many people are trying to short it, but it just keeps squeezing up higher and higher and higher. And it's kind of been ignoring this support trend line for a while. But I do believe that in some point in the near future, we are going to come back and retest that. So as of now, I'm not crazy sure where Meta is going, but to me, it is interesting that right now we are around the base of this massive gap right there. So definitely something to take note of. And support could be right here at 235.94, which was this fib level, this 50% retracement level that we recently just got back above. Now, if we are looking at RSI, it is over 70 right now. MACD, it's kind of just flirting around with the signal line, not seeing a whole lot happening there. So moving on, Microsoft. So Microsoft right now, we are kind of marching over to this 320.39, which is this 78% retracement level. We do still have that massive gap to the downside. We are above this rising wedge scenario. And if we are looking at MACD, there is an interesting situation where in the past we have kind of topped out here before. So definitely do watch out. MACD is kind of flirting with the signal line. So, this could go back into inversion. And RSI right here, it's over 70. So definitely do be careful. So you are kind of seeing this clear pattern where you're seeing the mega cap stocks at RSI levels over 70. So this is another reason to be very, very cautious. Now, let's go ahead. Let's look at the dollar. So the dollar is interesting as well. Now, where I see the most interesting situation on the dollar is right here on the weekly chart. So pay attention to the MACD and the RSI. So RSI right here, it makes this double bottom. RSI right here makes this double bottom. RSI right here makes this double bottom. What's the weekly MACD doing? We're also seeing the same situation right there. And then that first cross above the signal line, that tends to be a fake out. It's the second one that's the real one. So right here, fake out, real one happened right there. And then, we saw that massive rip. So what are we seeing right now? Very similar situation. We got that fake out right there. And then now the second one, this one could be the big rip. So definitely something that I would keep an eye on. If we're looking at a shorter time frame, we did kind of fill, let me go out to the 90-day 1 hour. So we did fill this gap right here. We do still have these two upside gaps, and this could take us all the way up to 105.65. Now we do also have two downside gaps, so do be mindful of that. And like I said, RSI right now is looking favorable on DXY. So the other interesting thing is that we're seeing a divergence. The dollar has been rallying pretty hard these last few days, yet tech and SPY are still going up. So to me, that is a major, major divergence that you want to pay attention to. What's telling the truth? Is the dollar telling the truth, or are the mega cap tech stocks telling the truth? So now let's go ahead. Let's look at Google. Google is just absolutely crazy. Just look at the RSI here. I mean, this thing is, oh boy, it's giving us some pretty crazy readings. So this is like 76-ish right there. Now, another thing that I do want to pay attention to is this candle right here. So this candle could possibly be some sort of topping candle right there, especially if we don't see some follow through in the next few days. So in the next few days, if we are not making it higher than this, this could be a topping candle right there. So definitely do look out for that. Now, if I zoom out a little bit and just kind of look over here. So yeah, if I am zooming out right here, we did hit that retracement level right here. So that's a 61% retracement level. That's right at 125.72. I did not think that we would hit this. So we basically moved 2 standard deviations the last week, and even the week before that, we moved 3 standard deviations. So we're having some crazy moves. This is a parabolic move on Google. So this is another reason to be careful, because RSI on Google is exceptionally high. And yeah, we're just having this straight up type move. So definitely be careful, because a pullback on Google and a pullback on Microsoft, a pullback on Meta, a pullback on all of these stocks that are well over 70 RSI, that are making up the mega cap stocks, those pullbacks could bring a pretty significant pullback in the indices. So definitely something to be mindful of. Let's go ahead. Let's look at Amazon. So Amazon, we were recently in that severely overbought territory. We're starting to pull back just a little bit. RSI is about 66.77. MACD right now, it is still kind of bullish. If we are looking at resistance right here, it would be that 122.14 level, which is the 38% retracement level. We are above this breakout trend line right there. So let's go ahead. Let's look at 10-year 1-day. So you guys can clearly see that we did have this resistance trend line right there. So rejection, and then we broke out of it. So something to pay attention to. We also broke out of this trend line as well. We do have a potential golden cross scenario that could occur. So see that 50-day right there and that 200-day? Well, if we continue in this trend, we're going to have a golden cross. But if we do just sell off from here, that could undo itself. But right now, just kind of the way that it's trending, it does look like it does want to have that golden cross scenario. Now, let's go ahead. Let's look at the VIX. So the VIX, VIX has definitely been suppressed here, but do note that we are underneath this macro level trend line right here. Now, where the VIX is right now, it looks pretty similar to right here. So if you guys can see that, let me just zoom in. So, right here, we were consolidating for a little bit. We hit this bottom point right there, and then we rallied up. So it kind of looks similar right here. So we hit that bottom point right there. Maybe this is some sort of ugly inverse head and shoulders, but let me go on a shorter time frame right here. We do have this massive gap right here on VIX. So this is an upside gap. It would not surprise me if we got back over this macro trend line, that we go and we fill this right there. Do we see continuation of this? I'm not too sure, but if we do, then yeah, expect a pretty sizable pullback in the S&P 500. Now let's go ahead, let's look at VXN. If I'm just looking at VXN, we have that similar gap right there too. So yeah, we could go ahead and fill that gap on VXN as well. So definitely be a little bit cautious. We're also below that macro trend line on the VIX, or VXN I mean. So if I go back and look at the 10-year 1-day, you can see that there's this macro level trend line right there. We're below that right now. We do have that upside gap. So volatility right now, generally when you have gaps like this, they tend to fill within 2 weeks. And we've already passed this 2-week time frame. So, I would expect that in the near term, we could see this getting filled. Now, let's go ahead and last thing I want to talk about is XHB, which is the Spider Home Builder ETF. So this kind of just caught my radar real quick. So let me just kind of talk about what I saw. So what I saw pretty much happen on Friday was, while everything else was mostly flat, we saw the home builders sell off quite a bit. And pay attention to that right there. So this right here, that's a bearish engulfing candle right there. So we had this bullish price action right there, bullish right there, and then totally undid that entire day right there with this candle right there. So that is a bearish engulfing candle. So let's go ahead, let's zoom out. Let's go back to the 10-year 1-day, and let's zoom out a little bit more. And what did we recently just hit? Well, we recently just hit this fib level right there. So this fib level right there, that's about the 61% retracement level. That's right around 73. So we hit that. This also kind of looks like a double top. So if this is a double top, we just had that bearish engulfing candle, then things don't look that great. And if we are looking at the MACD, MACD is kind of just flirting with the signal line. It could cross under if we do see some continuation of this sell-off right there. So maybe the home builder ETF, it's trying to tell us something. But that basically concludes the technicals, which I actually lied because I actually do want to cover the expected moves real quick. So let's just cover the expected moves real quick, and then I'll be done. So just a quick summary right here. We're looking at Microsoft. That's overbought on the RSI. That's a 71 reading. Qs, that's a 71 reading. NVIDIA, that's almost close to overbought, 69 reading. Google, that's a 77 reading. Meta, that's a 71 reading. So, we have all these mega cap tech names that are pretty much overbought. Now, something that I do want to keep note of right here, Microsoft, resistance at the 78% fib level, that's 320.39. On this Apple, we have MACD convergence and 3 gaps to the downside. We also have 3 gaps to the downside on the Qs. Possible resistance over at the 50%, or we could possibly retest that 50% fib level at 331.58. And right here on Tesla, we filled that gap around 180, and we do have upside resistance at 190.31, which is the 20% fib level. Now, right here with NVIDIA, we have support at 79.6% fib level. That is 294.84, and we have earnings coming up. So definitely something to be mindful of. Now, with Google, we have resistance at the 61.8% fib level. That's at 125.72. And we've also had basically 3 standard deviation moves last week and a 2 standard deviation move last week. So, this is pretty overextended in my opinion. If we're looking at Meta, we have that support at the 50% fib level. That's at 235.94. IWM, we're within a head and shoulders pattern. So let me just show you that real quick. So IWM. So head and shoulders right there, shoulder, head, and then this could be a shoulder right there. But right now we are kind of seeing this consolidation right there. Now, lastly, let's look at the Dow. If we're looking at the Dow, we have resistance at the 61.8% fib level. That's around 337.84, and support at the 50% fib level at 328.06. Take a look at the Dow real quick as well. That's basically what we're looking at. We're basically sandwiched right between that fib level and that fib level. We're pretty much sitting on this anchored VWAP. So as of now, Dow is just moving sideways. Not a whole lot of action there. So hope you guys enjoyed this video and have a great one.